the red candle, and entire day after that price was like very small range bound day, and suddenly around 2:30 this kind of candle started getting aggressive. And see, once this can from here only aggressiveness started buying aggressive. Third candle took the all the stop losses of big players. But remember, when you take the breakout trades, then there is a pivot. Ignore this any pivot nearby. Just take it because it can take out all the pivot. Second thing to be noted when you take this breakout trade, candle has to close above this candle. Okay, this candle only went above this candle and got rejected. Can you see this big wicks? Rejected, right? Still it closed below this candle. So long is not on this candle. This is not a candle entry candle, even though this candle went above this candle because it's got rejected. So don't take long trade here. Next candle closed above it. Candle has to close. This candle closed it. Then go long and then ride the trend till 3:30. How to ride the trend? For that you have to use one unique moving average that I'll show you when we come to the moving average. Moving average helps you when you take the breakout trade to let your winners run. Okay, so this was the previous day, 14th. This is 15th. 14th was a big red candle, right? But there was no retracement or no breakout entire day. It was a till here it was like a trend day. Okay, then price remained in this box for a very long time. And next day, small candle, second small candle, third small candle, and see, fourth candle took all the stop losses of this red candle, and this candle will give you indication that all the stop losses gone. How you will know stop loss is gone? Candlesticks will give you that signal. This is the stop loss candle. This is stop loss candle. Okay, which is the stop loss candle? This one. This is candle. Stop losses. Stop losses, they say it adds fuel to the fire. When you add fuel to the fire, you know that it intensifies. Same thing. If all the stop losses, so many stop losses are here, and once it get triggered, big move. Second reason is that most of the traders, their stop losses mainly at low of the day or high of the day. Okay, that is what normally retailers and all the traders, I know that many traders have strategies where they say that go long here and your stop loss should be below the low of the day. If they short here first candle, then their stop loss will be high of the day. But that's a very wrong system how to keep the stop loss. So that is the way when high of the day or low of the day breaks, you can see a big movement. High of the day broken, big movement. Okay, but don't get confused with the M pattern. Okay, M pattern also you have to short near the high of the day. Red candle breakout you have to go long, and uh, for M pattern price has to go like this and then fall, and when price again comes here, then you have to short. But red candle breakout not like that. Red candle breakout you should wait for stop loss to get triggered. Once stop loss got triggered, enter it long. This is stop loss got triggered of previous day. Here, this again one more pattern you can see that green red candle retracement, but it went little bit above. So if you have taken trade just above that, then it would have hit your stop loss if you have gone long. But it went little bit above and then it reversed, and again candle came, and this candle successfully took all the stop losses above it. Most of the stop loss were here. This candle could not take the stop loss. This candle closed and took the stop loss. This you could have taken for the red candle retracement trade. Stop loss above the weekly and expect small profit on this trade. Okay, so finally, Kishore, your question I'll answer when we come to the stop loss method. Okay, remind me when we come to the stop loss method, so we'll not go out of our track. Finally, this is the 15th pattern which we discussed. All the pattern is this green candle breakout. Again, same thing like red candle breakout. Big green candle at the opening created by big players. Stop loss below this candle. Along with that stop loss, people who are day traders, they also keep that stop loss below the previous day low. And whenever the candle takes out the stop loss, whenever the candle closes below this candle, you can see one-sided move on one side. This is open drive, right? Even though it is well below the previous day high, green candle, bullish candle, and there is a support below the candle, pivot support. So this is the first candle low. People started buying here. People started buying here. Late comers also started buying here. Stop loss here. Once stop loss got triggered, big move. Same move like how yesterday price was going like one way traffic, like kept on going up. Same thing like on this day also price started falling down, but I don't expect to book my profit here. Once it comes to the CPR, I take my profit. Okay, can you see here on I don't remember, I have not taken the screenshot correctly. This is the red candle breakout. I suppose the first candle is red candle, third candle made a small retracement, and fourth candle, see, it broke the first candle. It's not very clear. This is the red candle breakout and price one-sided move. But I have to check it again, which day it is. I think it is June 30th. Okay, again, I said red candle breakout, green candle breakout are more common pattern in the late afternoon. But doesn't mean that it should not happen at the opening. Today it happened at the opening. So can you tell me first candle, what pattern is this? If you remember, we discussed first green candle, it's a morning star, right? But this trade failed. I remember I took this trade on June 13th. When I saw this candle, I knew that it's a morning star. I expected price to go and hit the CPR where I thought I'll take the profit. But what happened? It went and faced the resistance at the 20 EMA. Okay, and this candle, my stop loss was here, little bit big. I thought it's a good trade because there is a pivot below this candle. So I kept my stop loss and my stop loss was hit. Along with my stop loss, all people stop loss hit. That's why this candle, aggressive bearish candle, that means stop loss candle. All the stop loss gone and immediately sell off till the here. And I immediately reversed my long position to short position. First trade hit my stop loss. Second trade, I took a short position because I knew that it's a stop loss gone along with my many people stop loss gone who were bullish at the opening. Immediately I went short at this candle once stop loss hits and I booked my profit near the next pivot. Okay, there is something called SAR, stop and reversal trade. Okay, stop and reversal trade, nothing but once your stop loss hits, you will reverse the trade. For example, I was long here and my stop loss hits. So first I was long, once stop loss hits, I reversed my trade. I went short. That is known as stop and reversal. But remember, this pattern, you should take only stop and reversal for few pattern. If you take the RCR trade and if it instead of RCR it turns to RCBO, then mean your stop loss hits, then go long. If you have taken a GCR trade or this trade I have taken thinking that it will go long but hit my stop loss, I'll immediately reverse my position. Imagine you take an OD trade, open drive, but trade reversed and first candle low broken and closed. So now instead of your long position, immediately take a short position, reverse the position. That is known as stop and reversal. But not every time it works. Okay, not that every time your stop loss hits, you'll reverse the position. No, only in few patterns. Okay, so this is 2nd of April. Okay, here I think here one more red candle breakout trade, right? This is a red candle, high is taken and see one-sided move. Okay, anyway, we are discussing here. This is the low of the first candle. First time green candle retracement happened here. You could have taken a profit near the swing high. Second time afternoon, small fight between the bulls and bears, and this is the stop loss candle. Fully bodied, no wicks or small wicks will tell you that it's a aggressive selling, plus all the stop loss got triggered which were below this, and then sell off here, small bounce here, then big sell off again, and it would have given you big profit. But only thing is that stop loss will be big, because when you take this trade, you should not keep your stop loss anywhere between this level, because sometime it can happen, come here and then it can reverse like this and your stop loss gone. So my advice is, if you take this trade, maybe go only half of your lot size, keep half of the lot size here, and stop loss should be here above this pivot and above this candle. Okay, don't short here and think that you'll keep the stop loss. This day it did not retrace and hit your stop loss, but a small move bounce would have taken your stop loss. So this is again recent on 12th September. Green candle, open drive kind of pattern, but taking resistance at the pivot. So you should have avoided long trade here. What happened here? This candle came near the green candle and bounced. Small bounce, and third time again it came and this time successfully closed below the green candle and taken all the stop losses and sudden downfall. Okay, so this kind of candle will give you clear indication. This is not the clear indication because this candle has a big wicks. So buyers have defended and pushed the price again up, but this candle took the stop loss. Okay, let me tell you one thing, guys. This all looks very good and easy, right? But live market, you have to be like, I mean, very like active. You should watch candle by candle, and it will come with little bit experience, little bit screen time, and all this. Watching trades after the market hours is different than trading in the live market. That's why experience very important. Some people say that, okay, if your trade strategies are working for you, then it should work for me also. But no, I say that no, not necessary. It has to work for you. It may work for you with some experience, because it's just like any cricket match or anything. Like Virat Kohli become world famous player. Along with that, many players also took the coaching from the same coach. Sachin Tendulkar became successful cricketer. Along with Sachin Tendulkar, there are many players like Ajit Agarkar, Praveen Amre, and there are so many cricketers who played for India, right? Like Sanjay Bangar and all this, all are coached under Ramakant Achekar. He is the coach who trained Sachin Tendulkar. Many people went on to play for India, but many players play only for Ranji. Many players only could end up with the club cricket. Okay, so that all depends on your skills, how well you execute your trades, how well you analyze in the live market. So that totally depends on you, how well you analyze all these patterns during the live market. Okay, so this is all about the 15 patterns which I wanted to share. So let me go back to the, okay, so I said some of the patterns. I'll tell you which are the high, like my favorite patterns, which very frequently happens and all this. See, I can't escape and go to the slide because sometimes this webinar get disconnected. Last time I exited from the full screen to go directly, but my Zoom got disconnected and again I had to connect. So I'm going one by one. So I'm going to sending all this patterns, all these slides. Okay, so memorize the patterns. Then I send you extra 15 folder with all the patterns with the names of the patterns with the additional historical charts. Now, due to time constraint, I can show you only 3-4 charts with the every patterns. Okay, so I shown you about these are the scalping and breakout patterns. When breakout patterns, expect for a 2 hour, 3 hour kind of trades or more also sometime. But scalping 1.5 to 2 kind of trade also you can book the profit. Okay, so let me tell you which are the more common patterns. Some patterns happens very frequently. What is the most commonly happening patterns? Okay, evening star most common pattern. This is the most, you can ask me the number one pattern which I said my favorite pattern. Red candle retracement, very frequent. Green candle retracement, very frequently happening. Gap up rejection, good pattern to trade, but very rarely happens. Why? Because every day market doesn't open gap up or gap down, right? Market opens gap up, gap down only if there is some global news. There are two types of gap up, gap down. Okay, because of global news and because of local news. May month there was a big gap up because BJP came to power, and you should not trade this pattern. If it is a gap up only because of global news, there's a US market opened 500, closed 500 up. So our market also opened gap up. Such markets, such days you take this trade. My request is never ever trade on events day. No patterns, no price action, no indicator will work on events day. When is event day? Yesterday was event day. When it was announced that finance minister is going to announce going to make some announcement at 10 o'clock, that was yesterday was events day. Totally avoid events day because market can go either side, hit your stop loss on both side, and it can be erratic movement. Election results events day. Avoid trading on events day. RBI announcement events day. Avoid trading at the RBI announcement day. If you are trading in the stocks comes with the result, quarterly result. Avoid trading on quarterly result day. There's a merger or some news, good news or bad news expected in some stocks. Avoid trading because all these patterns will not work on events day. Remember that. Okay, this pattern will work only on regular day. Regular day like any other days. Events day, how many? It happens like maybe yearly 7 to 8 days, right? Events day. So those days avoid trading all these patterns. Somebody was asking which day I have to avoid trading. Events day don't
जाओ
trade. Then CPR
शहद
breakout
डाल दो
is
और
very
मुनक्का
frequently
डाल दो।
happening trade. Gap
हाँ
down again depends on if market opens gap down. M reversal very frequent trades. Red kind of breakout very frequent trades. Green kind of breakout. Okay. So out of this 15, all are high probability, but some patterns are frequently happening. These are the rounded up patterns are frequently happening patterns. Which you want, you can master only this regularly happening patterns. Look for your favorite stocks. Okay, my advice is if you want to trade in stocks, only depend on Nifty 50 like HDFC Bank, Reliance, all this kind of high liquidity stocks. Only try these patterns. Okay, don't go for small like PC Jewelers and all this kind of small cap, mid cap kind of Gitanjali Gems, PC Jewelers, DHFL kind of stocks because all the stocks are highly operator manipulated. Okay, don't trade in operator manipulated stocks like mid cap, small caps. Go for highly liquid stocks, or my advice is go for Nifty Bank Nifty because it can't be manipulated. Stocks can be easily manipulated from operators. Okay, guys. So this is all about the pattern. So let me know if any questions you have. Any insights on trading on expiry day? Shrikant, my advice is If you are an option trader, sell options on expiry date, don't buy options. Okay, that is what I see. Let me tell you anyway, options I kept it for the next topic, but let me tell you, option selling has better edge, can give you, mean option buying, you need days like yesterday. Yesterday option buyers have made huge money, call option buyers, right? But how many times it happens? Very rarely this kind of move, right? So option sellers makes money most of the time. uh, what is the difference between RCR and RCBO? Apart from breakout happen after mid afternoon, see, that's what RCR, when you see big candle like this at the opening first 5 minutes, okay, see what happens next. If it falls like this, then it's more likely trend day. I'll also show you trend day, how you have to enter the trend. Second thing, what can happen, there is no follow up like this, market can go like this. Okay, when market goes like this, when it comes to the high, if there is a CPR also, then it's a high probability trade to short again by keeping stop loss. Okay, and sometimes it can happen no RCR, nothing, somewhere late afternoon breakout happens and all the stop loss gets triggered, then go long. So that is the difference between RCR and RCBO. Sometimes you took the RCR trade here and price came little bit and then it went and broke out. Your RCR hit stop loss because your stop loss here. RCR converted to RCBO. Then stop and reversal, I said, you can take the trade. That means your stop loss hits, now go long. Now earlier you were short, now go long and expect price to go like this. Okay, expect. I'm not saying 100%. Most of the time this one red kind of breakout at the opening can leads to big trend day and you can make a good profit. That is the difference between RCR and RCBO. RCBO, yeah, exactly, it is like short covering or stop loss. When stop loss gets hit, suddenly move starts, all stop losses, like if red candle breakout, all people have kept the buy order there, because when you short, your stop loss is your buy order, right? All the buy order get triggered, massive move starts, people who are breakout trades, they'll also follow this, they'll also take the trades. And traders like you, me, now we know that this all stop loss trades, it can go in one direction, we also take trades, big players also take trades. So we'll see big move going on one direction. Okay, any site which gives breaking news in time, I think moneycontrol.com is good for everything, for your live news, everything. Pankaj, moving average ATR I'll discuss in the next. Okay, so my suggestion is moneycontrol.com is good for any news before the market opens, or you have CNBC Avaz and everything. And after this webinar, I'll open a Telegram channel only for 2 months, as I discussed in the pre-webinar presentation. And every day after market close, maybe around 9:30, 10 by night, I create Telegram channel for every participant, every webinar participants. Okay, I'll upload Nifty and Bank Nifty chart, and I'll show you which pattern happened here, where you should have entered, where you should have exited. So in 2 months time, you will understand about all the patterns. Okay, and after that, anyway, you have my WhatsApp, you have my email. If you have any question, you can WhatsApp or email with your queries. But Telegram, remember, it will be there for 2 months. But every day after the market hours, Nifty and Bank Nifty, I'll put the chart with the pattern and everything clearly explained. Fine. So that's it about the 15 patterns. So now next, come to the next topic, my stop loss method in day trading. Here I'll discuss about where I normally keep my stop loss. Okay, there are 5 methods which I follow in keeping stop loss. One is ATR method. I discussed about the ATR method earlier, right? This is the average true range. Stop loss based on ATR. ATR will tell you range of that candle it is ATR is different for every time frame. 5 minutes different, 50 minutes different, 30 minutes different. Okay, so by ATR you know the volatility, so you can adjust your stop loss accordingly. Placing stop loss above or below important pivots like weekly, monthly pivots. Placing above or below PDH, PDL. Okay, if you are taking trade above the PDH, best place to keep stop loss below the PDH. If you are taking trades near PDL, on the breakout of PDL, keep stop loss above the PDL. Placing stop loss above or below the CPR, and placing below or above 20 MA if it is a trending mode and if you are following the trend. So let me show you with the help of charts. Okay, this is one of the example which I taken trade based on the ATR. This is about June 13th. Okay, June 13th I went long here. The reason I went long here because on 20 MA on the daily time frame also it was taking support and there was a pivot also. It was an expiry day and I went long by selling puts. But where did I place the stop loss? Okay, so that day was ATR was 8. 8. Now here you can see the ATR, it is showing 10, but at that moment when it is 10 showing at the closing, okay, when I taken the trade, ATR was 4. So what I done, at the whatever the premium price I had taken, I have kept half as a stop loss. I think premium was some 11 rupees. Okay, my stop loss was, I was selling the puts, so my stop loss was 5. So 11 was my entry price, my stop loss was 16. How I taken this 5? Because I seen what was the ATR. ATR was showing 4. I divided ATR by 2. That is 4 plus I added 1 plus 1 point buffer. So that's how I came to the conclusion. Okay, so ATR will give you most of the time stop loss where you can keep it. Had I taken the trade here, then ATR would not have been 8. It would have been like 12 or 13. Okay, so ATR will always will be high at the opening, then afternoon it goes low, and then late afternoon again it goes up. You also must have checked in the live market, always volatility high at the opening, mid afternoon low, late afternoon volatility goes up. Okay, so my one advice is if you are a trader in options or futures, if you don't know exactly where should I keep stop loss, how many points, look at the ATR, and 8 is showing because it's a nifty. Okay, it's a nifty chart. Bank nifty will not be 8 because bank nifty is like it's not trading at 11,000, it is trading at 30,000, right? Maybe ATR is around 50 or 60 in the bank nifty. Then if 50, what should be your stop loss? Keep 25 points as a stop loss, half of the stop loss. Okay, and same time if ATR is big, say 70 points, then 35 as a stop loss. But remember, it is only for option half. Okay, not for futures. Futures, whatever the ATR, that is your stop loss. But future, there is no problem with the keeping stop loss. But options, it's very tricky to keep the stop loss. That is the only disadvantage with the stock options. I trade in option, I don't trade in futures, but that is sometimes a little bit tricky in keeping the right stop loss. So one method I use, ATR method. Then second method where I said keeping your stop loss above or below the pivot. So which pattern is this? This is the, actually speaking, this is gap up rejection, right? Gap up, then big red candle, but stop loss will be big. If you keep it here, then you can short it on the retracement, but see how price goes exactly near the pivot and get rejected. This is the monthly pivot. So if you are shorting somewhere here, this candle, first candle, then your stop loss should not be anywhere below the, before the pivot. Keep above the pivot. If you above the candle also you can keep, but it will be too big. And this is a, you could have booked the profit here once gap got filled, but again this candle closed below the previous day high and went till near the CPR. This is an open drive, big red green candle, but if you enter here, stop loss should be here, not anywhere here below before the previous day high. And when you see the stop loss is too big, in that case, as I said earlier, reduce your lot size. If you are trading in stocks, every time you buy 200 HDFC Bank, and when you see the stop loss is big, then reduce your size. Don't go with 200, go with the 100. That's how you have to adjust your position size based on stop loss. Here, this is the green candle breakout, right? And good place to keep stop loss, keep another side of CPR. And in this day, CPR is not very wide, so you can easily keep the stop loss on other side. Even though there is a small retracement, like after the breakout, see small candle made a retracement only till the central pivot and reverse. So keep above other side of CPR. And again, there's a pivot here, but it again broke down and went down. So for breakout trades, don't pay too much importance because there is a pivot, especially late afternoon. Okay, this is a trending day, right? You know what's trending day? Price keeps going like this on one side, on upside or downside. Whenever you take a trend day, if you take a trade here, always your stop loss should be below the 20 EMA. Why? Because most of the time, if stock or index anything in the strong trend mode, most of the time it stays above the 20 EMA. Most of the time, sometimes it can come little bit, and but candle gets closed above the 20 EMA. So that should be your reference line. So my style of taking trades, if I want to take a trending day, then I take trade when it retraces back to the 20 EMA, like here, and where I keep the stop loss below the 20 EMA, because that's what back testing says, that when trend is very strong, price most of the time closes above the 20 EMA. It takes support near 20 EMA and it goes up. Okay, here I'll discuss about the moving average, which many people were asking. Some of the moving average I use 80 EMA, 20 EMA. Okay, when I started, I was trading with SMA. There are three types of moving average: SMA, EMA, and WMA. WMA I don't use when I have not done any back testing. But they say simple moving average is accurate, but it is slow. Exponential moving average is fast, but less accurate. That's what they say, that when you go and select moving average, it will give you two options, SMA and EMA. Okay, I started with SMA, but over the period of time, I realized EMA is much powerful and more accurate. Even the book says SMA is accurate, EMA is faster but less accurate, but I felt EMA is much better. So my advice is, if you trade with SMA moving average, if you are trading with SMA all these days, moving to EMA would be better. That's what my backtest says. You can also do some backtesting and see. Again, there are moving average, very famous moving average like 200, 100 moving average, 50 moving average, 24 moving average, 20 moving average, 8 moving average, 10 moving average. That is the problem with moving average. Which one is the best moving average? I said 8 and 20 is good as per my experience, but a person who trades with 24 and like 12 moving average, he'll say that is the best. So that is the problem with the moving average. Difficult to say which is the best, but here I will tell you, with my back testing, I have felt 8 and 20 is the best moving average. 200 moving average is like a, like you can say, grandfather of all the moving average. Okay, 200 EMA. People watch for 200 EMA. What is the reason? I don't know. Even in the business channel like CNBC and all this, oh, this stock is above the 200 moving average. Today, this stock closed below the 200 moving average. So it's a bearish and all this. But even earlier, I used to follow 200-day moving average on my 5 minutes time frame also, but it's very difficult, like inaccurate I felt. So I stopped using 200 moving average now, and only two moving average I use, 8 and 20 EMA. 8 EMA I use only for trend, following the trend after the breakout. Late afternoon breakouts, it helps me to ride the winner. What does mean? That mean if this is the red candle breakout trade, okay, price finally came and broke the red candle and took the stop loss, and this red candle breakout. This is the breakout, not trend following. When we take the breakout trades, immediately it starts moving in our direction, and we see that our profits are growing, and we get so excited, and sometimes we get fearful also, because sometimes it fluctuates. Your profit goes to 5,000, suddenly it comes to 3,000,
Right.
and you get scared. My profit already 5,000 to 3,000, already 2,000 gone, it will come to 2,000, 1,000, or I will come to the loss also. That's what our mind plays, and we immediately book the profit at 2,000, 3,000, and feel very happy that I made the profit today. But what happens, that day can end up with big movement like this, and you had you waited, your profit would have been 10,000 or 15,000, instead of taking a 2,000, 3,000 profit, right? It happens with everyone. Even it happened with me also when I was a new trader. That is where 8 EMA will come to help you in riding the winner. Many successful professional traders say that you should ride the winner. What that mean? That means if you have taken a trade and it's a right going in your direction, you are long and it's going up, then you should not be in hurry to book the profit immediately. You should try to ride the trend, ride the winner, so that your profit will be big. So then your profit will be big. It will take care of all the small stop losses which have incurred before. So whenever I see breakout trade like this, what I do, immediately I'll plot 8 EMA on my chart. So whenever breakout is very strong, it is believed that price will, this is 8 EMA, if breakout happened here, price will most of the time stays above 28 EMA. And don't book your profit anywhere here until you see that candle closes below 8 EMA. If candle finally closes below 8 EMA, then immediately book the profit. As long as candle stays close above 8 EMA, ride the trend and make a and have a good profit on that trade. I'll show you with the chart next. Next EMA I use 20 EMA. 20 EMA helps in entering trend when there is a strong momentum on one side. Previous slide also I shown, when there is a strong momentum trending day, most of the time price comes, takes support near 20 EMA and bounces. Okay, so 20 EMA still strong momentum on one side when there is a strong trending day. On larger time frame I use only 20. I don't use 88 or 20 EMA on larger time frame. Okay, because on the larger time frame also I seen strong uptrend, it respects 20 EMA, and whenever it comes to 20 EMA it bounces. According to me, 20 EMA is most important EMA on larger time frame. Most of the time market in uptrend or downtrend, when it comes and touches 20 EMA on daily time frame, large move or big bounce take place in intraday most often. As my experience, 20 EMA is most powerful compared to any EMA on larger time frame. Even it is same for 5 minutes time frame. On even 5 minutes time frame also I see 20 EMA working most of the time. So here it is. Where is the breakout? This is the CPR breakout, right? Entire day price was taking support above the CPR, and finally this candle broke down, and then big fall after that. If you were taking this trade, you would have booked the small profit here near the pivot, because this green candle is giving you impression that price is bouncing, and you would take profit here only and you'll exit it with small profit. But what had happened, it went on going down, and till 3:30, till market closed, it stayed below the ATMA. It did not close above the ATMA. Not only this day, even see, That same trend continued next day also on 8th. Still price was closing below the 8 EMA. I don't know where finally it closed above 8 EMA. So you should follow 8 EMA for letting your winners run and don't book your profit. When you see that finally one candle comes and close above the 8 EMA, then book your profit here. Okay, no profit booking until candle is below the 8 EMA. Here again 8 EMA working as a strong. Here somewhere breakout happened, CPR breakout, and candle only came near 8 EMA but took the support, did not close it. So wait, don't book the profit till 3:30. All this EMA and all this, remember, okay, only moving average is important if it is sloping like this or like this, up or down. Like this kind of moving average, important. This kind of moving average, important. This kind of moving average is not important. Moving average is no importance if it is flat like this. Moving average is powerful if it is like this or like this. Okay, so now it is 8 EMA. No, now it is 20 EMA. 20 EMA price trending day came near 20 EMA, bounced, and most of the time it did not even came near 20 EMA. So if you ask me how I take the trade on 20 EMA, 20 EMA trade, I don't take it blindly because it's coming near 20 EMA. For me, along with 20 EMA, I look for some confirmation. What is that confirmation? I will take 20 EMA trade here. Why? Because not only 20 EMA support is there is a pivot also. So if this comes here price, I'll take a long trade here. Why? Because 20 EMA support bounce can be expected. Then there is a weekly pivot also. So I can keep my stop loss here. Okay. That is one thing I observed it. If 20 EMA and pivots are nearby, then it's a high probability trade. Here this day, this is the first red candle, right? Whenever red candle, when you see that red candle, there is no retracement or no breakout. It's going like this, one-sided. And what our mind says, I missed a big move. Had I shorted here, I would have made a big profit. Had I shorted here, I would have profit. So our mind says that follow the, like chase this price and make the profit. Don't miss this opportunity. That's what our mind says. That is how novice traders thinks. But that is not how you have to trade. When you see this kind of move, already you lost so many opportunity to short, then you have to patiently wait for the price to come to 20 EMA. First time when price comes to 20 EMA from 9:15, price came to 20 EMA only at 12:15. So you should patiently wait till 12:15, and when it comes near, then short here. Why it's a good place to short, not here or not here, because 20 EMA and then there is a weekly pivot. It's a good place. You can keep stop loss above the weekly pivot and then start riding the trend. Okay, so this is how I take the trade. I don't blindly go and short near 20 EMA. For me, along with 20 EMA, if there is a pivot above it like this, then it's a high probability trade. So I said on larger time frame also 20 EMA sometimes works very well. Price you can expect a bounce, and this kind of 20 EMA is powerful, like sloping kind of on upside or downside. Okay, so this is about the moving average. So if any question, let me know so that I will take your question before going to the next point. Shrikant, the next topic is how I trade options, which strike I choose. So there I will discuss about future and options. Okay. Dinesh asking, do you recommend trailing loss? See, it depends on trader's personality. Okay, every trader, every human being has different personality. So if you are like trailing stop loss, doesn't mean that I will follow it and I should follow it. Depends on how you see it. For me, if you ask me, I don't believe in trailing stop loss. Instead, I'll try to have a strict risk reward of 1.5 or 2R or 3R. And once I'm in, if I'm a scalping, doing some scalping, then around 1.5, I book all my position. If I long 10 lot of bank nifty, if I see that it's 1.5 R and then there is some resistance, then I think price will come down. So immediately I'll square of all 10 lots. If I'm taking a breakout trades, if it's 2R, I might take book all the 10, sell it and book the profit. If there is a breakout trade, I am plotting 8 EMA, and once I see 3R, then I'll go and keep my stop loss there. So I trade with the fixed risk reward. But there are some traders, they take 10 lots bank nifty. Once price goes 1R or 1.5R, they will square off 5 lots. They'll sell 5 lots, and again they expect price to go up. Again they will sell 3 lots, again they sell 2 lots. That is how some traders do it, but every time it won't go like this, right? After you booking 5 lots, price can come down and you may have to sell another 5 lot at lesser price. So I don't do trailing stop loss like that. I go 1 lot, 10 lot, whatever lot at a time, and I sell all the lots at a time. That is my style. Balkrishna, can you please answer the above two query, ATR and EMA? Okay, so a lot of questions I think I have missed it. Balkrishna, ATR period setting same. I think it is, if I'm not mistaken, it is 14. I don't change it. ATR, whatever trading view is giving, go with the same one. EMA, do you use on spot or options or futures? EMA I use on spot. Okay, remember again, I remind you everyone, all these charts, whatever I explained, all the patterns, everything from the morning, all are on spot chart. All the screenshot what you are seeing is spot chart, okay, not futures or not options. So EMA, ATR, everything on the spot chart. Nitin asking how many trades you take daily mostly. Nitin, I have rules. I don't take more than 2 to 3 trades per day. Okay, so I don't want to do whole trading. So that is my rule, and I'll come to that in the third section, trading psychology. What are my rules? How many trades I take? Sometimes it may happen that entire day there is not a single pattern. I don't take any trades. As I told you yesterday, there was such a big move, like almost 2000 point move in Bank Nifty, and people must have made so much money who wherever they entered, they made money yesterday, right? Call option. When wherever you entered, they made money. All novice trader, new traders, everyone trade made the money. But I did not made money yesterday. Why? Because that is not in my system. I don't have any system for events day. Events day, I don't have any patterns. I don't trade only for events day. For the after the event, morning before the event, I took the trade, but after the event, I did not take the trade. If I taken trade, I would have made good money if I taken call option. But my system, I don't have any patterns for the events day, so I didn't take the trade. That is how you should stay disciplined. Okay, not that you are missing a opportunity to make money and you'll take the trade, because every day is not like yesterday. Sometimes good news also, market can crash. You must have seen some RBI policy day. RBI announces some good this one announcement and market spikes and suddenly every profit goes and it reverses. So better to avoid on events day. Jyoti is asking, do you trade Bank Nifty and Nifty together, or it is advisable to either trade Bank Nifty or Nifty, not both? Jyoti, I trade one trade. I take one trade at a time. If I see good pattern in Nifty, I take Nifty. If I see good pattern in Bank Nifty, I take that. If both Nifty, Bank Nifty showing same pattern, same time, if I had to choose one, I take Bank Nifty, because all these 15 patterns which I discussed now, I have my experience is it is more probability higher in Bank Nifty compared to Nifty, because Bank Nifty is more volatile, so it can give you profit faster than Nifty, because Bank Nifty has high volatile and it's more predictable. I felt Bank Nifty compared to Nifty. My experience is Nifty works very well whenever there is a trend day. Trend day is like this, right? Whenever you see trend day, Nifty works very nice, uptrend or downtrend compared to Bank Nifty. But breakout kind of trade, red candle breakout, green candle breakout, CPR breakout, my favorite is Bank Nifty. Bank Nifty can give fast profits in a short time. Surendra Babu, EMA can help on events day? No. Events day, no patterns, no price action, no pivot points, no indicator will work, because price will only react to the news. If it's good news, it will go up and again it can reverse, or bad news, it can make a big red candle, go down and suddenly bounce can happen, and your all stop loss keep getting hit and you get upset and you keep trying to take one after another trade to cover up your loss, and you can end up with the big loss. So avoid trading on the events day. Okay, so fine. So let's come to the next question about the options. How do I select option strikes? Whether I buy options or I sell options. Okay, let me clear everyone that I'm not a options expert like option Greeks expert and all this. There are many traders who are option Greeks expert. They trade only based on option Greeks. They don't do any analysis like me, charts, pivot points, price action. They are directionless traders. They don't predict whether market will go up or go down. Okay, they trade only based on option Greeks. There are many option Greek like delta, gamma, theta, and all this. I'm really not good in that. So this is not a options webinar, but still I'll give you whatever the basic knowledge I have on options. There are two types of options, buying or selling options. I am most of the time I like selling option more than buying option. On any day, I prefer selling option rather than buying option. Why? By selling option, I make money even prices not moving in my direction and stays at same place. So two ways to earn money in option selling compared to one way in option buying. What does that mean? That means near to expiry, especially Bank Nifty trading here, and you think that Bank Nifty will go up, so you buy the call. Okay, suppose Bank Nifty at 30,000, you think 30,200 Bank Nifty will touch, and you'll take option, call option of 30,200. Assume that today is Thursday and I am also taking trade. I also think that market might go up, may not go down or stay there only. And you bought a option at 50 rupees, call option 30,200. And what I do, I'll not buy a call option. I'll sell puts. Okay. I'll sell, if it is 30,000 Bank Nifty, I sell out of the money option, that is 29,000, maybe 800 call. Sorry, put. And what happens? You think market will go up, but market slightly goes up and will be like this only entire day. Neither it touches 30,200, neither it goes down. Okay, so you are partially right. You said market will go up. Yes, it went up and market closed here. You are partially right. I am also expecting same thing. Market went like this, but it did not go to 29,800. It did not go down, neither it stayed there like this. So finally what happens? 29,800 put option will become 0. If somebody paid 50 rupees, I get to keep all the 50 rupees as a premium, because I am an option seller. Market did not fall, market stayed there only. But being a call option buyer, you will lose all your options. It will become 0 at the end of the day, especially on Thursday, because it's a expiry day. In this case, both of us are right? Both of us thinking that market will go up. I was also thinking that slightly we are correct, because market went little bit up, not too high, but did not go down also. As an option buyer, you will lose the money because you bought 30,200 call thinking that market will touch here, but it did not go, and you lost the money. And being an option seller, I'll make the money. So for option buyer, the moment you buy the call option, it has to go like this. Then only you make the money. Being an option seller, if price goes like this, I make the money. If I sold puts, if price doesn't go like this, stays like this, still I make money on both sides. But you will make money only this side. You will make not make any money if price slowly going and staying there only, because there is something called theta in option, time decay. Okay, that's one of the option Greeks. That means as time comes near the expiry, the call option, put option, which are out of the money, will become zero. Even it was 100, 200 rupees 2 days back premium, it will become zero the day of the expiry. It is just like if you take a tray of ice cubes from the refrigerator and you keep it in the room temperature, and after some time you'll see that all these ice cubes becomes zero, ice cubes becomes water, right? Same thing with buying option. Buying option, you'll make money only if it goes in your direction and it becomes in the money before the expiry. But selling option, you make money if it is stays out of the money. In selling option, just you have to know where price will not go. But being an option buyer, you have to predict where price will go. So I buy options very rarely when I expect price fall heavily, like breakout trades, mostly in late afternoon trades. Sometimes I buy puts. I buy option, that is I buy puts, because if you are an option buyer, if you want to make money, your volatility has to go up. Okay, volatility has to go up, then your premium price will go up and you'll make money. When volatility will go up, remember one thing, volatility will go up when market falls or goes up. Like yesterday market went up like that, but same time if market fell like that, then your premium would have gone much higher than what it has gone yesterday. Because there always you should remember, volatility will goes up very fast when market falls than going up. So whenever I expect market to fall, I'll buy puts instead of selling calls. But when I expect market to go up, I sell puts. So there are two things you can do being an option buyer. If you think market goes up, you can buy call option. Being an option buyer, you'll buy call option. Being a seller, I'll not buy call, I'll sell puts. That is what option seller will say. Option seller will do, he'll sell, and option buyer will buy it. If you think market will go down, you will buy puts and I'll sell calls. So option seller will always sell, option buyer will always buy. So my advice is, near to expiry, Wednesday, Thursday, instead of buying option, sell options. Because I know that many people will get scared when you say that, because always they say that option buyers profit is unlimited, limit loss is very limited, right? And option, being an option seller, loss is unlimited but profit is very limited. But thing is that even I used to get scared before selling option. So I used to be option buyer, but only after started selling option, I realized the edge option sellers get than option buyers. And keep the stop loss. Never trade without a stop loss, whether you are an option buyer or seller, so that your loss is limited being an option seller. If yesterday you sold call option and market started going up, if you did not give the stop loss, maybe you would have blown up your account. All your uh, capital would have gone yesterday kind of days, being an option seller. And if you are an option buyer, you bought the option and you would have made such a profit that entire year you would not have made profit that you would have made in one day, being an option buyer. But question is, How many times in a year you'll see days like yesterday? That is why option sellers make money. Just like insurance or casino, they say that insurance always they make money. And insurance buyer, if you take term insurance, every year you keep paying the insurance, but you will get a big money only when you die, right? Same thing. So when you see big kind of move like that, then only you can make money being a option buyer. But as I said, most of the time markets remain range bound and all this. And market remains range bound, it is option sellers paradise, because they sell out of the money option and they make money. So my advice is, go to YouTube and type sensible. It says Zerodha sister concern, and you get all the knowledge about option basics, all about option Greeks, everything about buying option, selling option, all the knowledge you'll get by going to YouTube and type sensible, and go to Google, type Zerodha Versity. Here you will get all the knowledge about basics about options. So because I also have basic knowledge, but it's a lengthy subject, options and all this, which can't be discussed in just few minutes. So you can get the knowledge by going through. On regular days, I sell options, one to strikes away Nifty, Bank Nifty. While buying option, I buy at the money or slightly out of the money. So if you are an option seller, always sell options out of the money, okay? Because you'll get theta benefit. Wednesday, Thursday, and all this, you get, even though stock is, if you sold calls, okay, market is here 30,000, and you sold 30,200 calls. Everyone thinks that market is boring today, market is not doing anything, but being an option seller, you will enjoy that day because you sold 50 rupees or 100 rupees call option, and it keeps on going to 40 rupees, 30 rupees, 20 rupees, even though market is not doing anything, staying there only because of theta, time decay. So option sellers have edge by selling out of the money option. So for me, selling option, it's always out of the money option, neither at the money or in the money. Since I'm not an option Greeks expert, I just sell out of the money. For example, if I sell 50 rupees option, immediately I put my stop loss wherever based on ATR or based on pivot points or all this based on my risk reward, and I leave it. If I'm wrong, it will hit my stop loss and take my stop loss. But I'm never at unlimited risk. Even days like yesterday, market Bank Nifty went 2000 points, still I'll not make big loss because immediately I'll put my stop loss. Okay. So my selection of strike price also depends on volatility, option free price. So selecting option strike sometimes varies than what I mentioned above. So somebody was asking difference between trading in futures and options. Again, it is individual decision. Both have pros and cons. Both have advantages and disadvantages. Future advantage is, it is just like trading in the spot. Stop loss keeping is very, I mean, keeping stop loss is very easy. Futures, you don't have to look at the ATR. I mean, you don't have to look at the ATM out of the money option or in the money option and all this. There's only one future and easy to keep stop loss. But only problem with the future trading in future is there is very high STT, turnover tax. Okay, very high. Options, very low turnover tax. For example, if I buy one lot of options and sell one lot of options, for me it costs only 50 rupees. Around 20 rupees brokerage buying, 20 rupees brokerage selling, 40 rupees plus 10 rupees, all these taxes and all this. I pay only 50 rupees per lot buying and selling. But same time, when I buy one lot of futures and sell one lot of futures, I pay almost 150 rupees. So it is almost 3 times cost, not small cost, futures and options. That's why many people move to options than futures. But if you trade with one lot, two lots only, then it is not a big difference. But when you go up like 20 lots, 30 lots kind of trader, then your additional cost can be huge in trading futures compared to options. Okay, so that is the both benefit and both advantage and disadvantage of trading in futures and options. Yeah, disadvantage, that's what Srikanth, I told you, disadvantage is cost. It's almost three times of cost. If you are trading in Zerodha, there is a Zerodha margin calculator. Go there and put all the prices, and you'll see that how much you'll pay for buying one lot of uh, futures and one lot of options. Okay, somebody asking, please explain risk management. Risk management is the next session. We are almost done with the second session. Okay, guys, so that's it about the second session. So we ended the second session of 15 day trading patterns and strategies. We covered options, we covered moving average, we covered stop loss methods. So last two sessions left, that is risk management and trading psychology. So what we do, we'll take a small last break, 10 minutes, okay, and then we'll go ahead with the risk management and trading psychology. So let's take a last break, and I'll take the questions after the break, okay? Okay, so I'll take some questions and then I'll go with the next one. Next is quiz on online quiz. I'll show you some charts and you have to identify the patterns. Okay, so I'll take some questions. Surendra Babu is saying what is helpful for scalper intraday. Surendra Babu, your question is not clear. How to quickly decide which option to sell by, as at times we might miss the trade thinking about strike. Can you once again tell about how to put stop loss when buying or selling options? How to quickly decide which option to sell or buy? Yeah, Jyoti, first you have to decide whether you want to buy or sell options. Okay, I'll tell you again. If you want to buy option, then decide which days. See, Friday, Monday,